Welcome, and thank you for joining. My name is Ben Metcalf, and I direct the Terner Center for Housing Innovation, a research center out of the University of California, Berkeley. We are very pleased to be hosting a webinar today with all of you. Our partner for this webinar is the Federal Home Loan Bank of San Francisco. They play a key role in the housing market, ensuring liquidity in underserved communities and supporting financial institutions providing financing to low and moderate income homebuyers. Today, we are hearing from experts in policy and development finance to go deeper into what is needed to get more housing built in a very challenging and unpredictable market. I'd like to start kicking us off with a video welcome from Representative Susie Lee from the 3rd District of Nevada. Representative Lee has served in the House since 2018, and she sits on the House Appropriations Committee. She is also co-chair of the Bipartisan Women's Caucus and a member of the Bipartisan Problem Solvers Caucus and New Democrats Coalition.
Hi, everyone. I'm Congresswoman Susie Lee, representing Nevada's 3rd Congressional District. Listen, it's no secret that we're facing a severe housing crisis, causing prices to increase way beyond what is affordable for most families and first-time home buyers. That's why I'm so grateful for the Federal Home Loan Bank of San Francisco and the Terner Center for Housing Innovation for convening this forum to discuss how we all can work together to increase our supply of housing and lower costs for working families. I also want to give a special thanks to Maurice Page, the Executive Director of the Nevada Housing Coalition. Maurice and the Housing Coalition are constantly working to address the affordable housing crisis here in Nevada, and I'm so grateful for their commitment to our community. Solving our nation's housing crisis will be a team effort, and I was so proud to partner with the Federal Home Loan Bank of San Francisco to deliver investments across Nevada, including a recent $960,000 investment to build 240 housing units for low-income families here in Las Vegas. And we cannot leave any stone unturned when it comes to building affordable housing, and opening up federal lands is just another piece of that puzzle. That's why I'm leading the Clark County Lands Bill, which would support new home construction on federal land while also protecting our public lands and our water supply, also advancing outdoor recreation and supporting our tribal communities. And last Congress, I passed my bipartisan ACE Act to speed up the appraisal process so we can get more federal land transactions moving faster. This bill will help cut through unnecessary red tape, and I was so proud that it was signed into law earlier this year. By working together in both public and private sectors and reaching across the political aisle, I know that we can create meaningful change and ensure that everyone has access to housing. So I want to thank you again, and I wish you all a great and productive conference, and I very much look forward to hearing the positive results.
With that charge, let's get going. In our conversation today, first we'll hear from experts from California, Nevada, and Arizona on how each state has confronted their unique housing challenges and what the impact has been so far. Then we'll shift and hear from development and finance professionals on whether policy changes have made it easier to get projects off of the ground and what barriers still remain, particularly in the area of project finance. Note that audience comments and questions are requested. Please jump in and offer your thoughts. You can do that through the Q&A function. Note also that the discussions today will be recorded and made available after the event. With that, let's go. I'm going to hand it off now to David Garcia, Terner Center affiliate and policy director at Up for Growth, who will be moderating our first panel. Thank you, David.
Thank you so much, Ben. As Ben mentioned, our conversation in today's first panel is going to look specifically at policy changes in California, Arizona, and Nevada, which are the states that the Federal Home Loan Bank of San Francisco has jurisdiction over, and really unpack how these reforms have led to meaningful changes and which hold the most promise in increasing housing supply affordability, and really what's left to be done from here. So today I'm joined by a wonderful panel of experts. First up is Kieran Goff, who is the executive director of the Arizona Neighborhood Project, which works with policymakers to address root causes of issues related to housing. Kieran is an attorney, and she's worked in several roles related to policy, law, and the built environment. Next, we have Michael Lane, who is the state policy director at SPUR, which is a public policy think tank in San Francisco and has an extensive background in housing development, local government, public policy, and politics and campaigns. Michael has served on board of directors at Housing California, as well as the board of governors of the California Housing Consortium. He's also been an elected official at the local level. Thank you for being here, Michael. And last but not least, Maurice Page, who was given a shout out by Representative Lee just moments ago. Maurice serves as the executive director of the Nevada Housing Coalition, which is a statewide member-based nonprofit dedicated to advancing the development and preservation of affordable housing for all Nevadans through collaboration, education, and advocacy. And Maurice brings over 20 years of experience across the fields of sales, banking, homelessness services, and housing policy. So thank you, Maurice. Thank you to everyone for being here today and sharing your expertise. And so I'm going to jump right into the questions here. Each of your respective states are kind of at different points along your housing reform journey. And so what I really like for each of you to answer quickly is, what has been the biggest policy change in the last year for each of your states? And so I'm going to throw that over to Maurice to start. So Maurice, what has been the biggest change in Nevada in recent year?
Well, first of all, thank you so much for having me on the panel. Thank you to Representative Lee for the shout out, and just appreciative of the opportunity to speak in front of this crowd. So the biggest policy change in the last year, we in the state of Nevada, we meet during our sessions, meet every 2 years. And so we just finished up our session, our 2025 session in June. And so this session was very, I would like to say we had to think of it, we was very careful, very mindful of how things were going to play out, especially from a federal and state perspective, understanding that budgets was not computing, was not adding up. But the one ingredient or the one pulse that we followed through was with housing. I can say that 10 years ago in the state of Nevada, we had roughly 3 to 5 housing bills that was brought in front of the legislation. And this year we had over 60. And 40% of those bills were able to get passed and signed by the governor. The 3 biggest ones that I would like to highlight is, number one, the governor brought to the table his Housing Attainability Act, which was Assembly Bill 540. This was a landmark 133 million investment that is being established as the Nevada Attainable Housing Account. We are expanding the AMI up to 150%. We're funding loans, workforce development, and we're also creating a housing council. And through our housing division, our housing finance division, they are also contributing $50 million in bonds. Another bill that came to fruition is Assembly Bill 366, which is our Nevada Supportive Housing Development Fund. This was something that we actually created back in 2023. Our organization brought it to the table, and with the leadership of Assembly Member Danielle Monroe Marino, we was able to get it through. In 23, we had a one-time appropriation of $32.2 million. This year, we was able to get it a permanent funding source coming out of our general fund of $21 million going forward. And so using this money around support services and new development will be huge for us to be able to overcome our issues with homelessness and the lack of wraparound services for those who are struggling in need. And then finally, I'd like to highlight Assembly Bill 241, which was a by right multifamily housing on commercial land. This will require a lot of our cities and jurisdictions to allow multifamily or mixed-use development by right on commercially zoned parcels, overriding local ordinances, and that will start in first quarter of next year. Again, we had out of the 60 bills, we had over 26 bills that were passed. We had an unprecedented amount of money allocated towards housing. And so, when we think about Nevada, we were the fastest growing city over the last 70 years. It took Chicago, New York, and other places centuries to get to where they was going. We achieved it in 70 plus years, and we're still top 5 in the country as far as growth. And so with that growth, we have had, a lot of hurdles to have to overcome with the lack of affordable housing, the lack of market rate housing as well. And so the fact that we're moving in the right direction and picking up steam in regards to allocating funds towards housing has been a huge win for us overall.
Thank you, Maurice. It's great to see so much momentum in Nevada. Kieran, I'm going to kick it over to you. What have you been working on in Arizona? What are the big wins in your mind?
Thanks. So first I'll just give a kind of high level overview of what we've been working on, and then I'll highlight a couple of bills specifically. So over the last two legislative sessions in 2024 and 2025, we successfully passed and got signed by the governor in last year's legislative session, two bills initiated by Arizona Neighborhood Project. And then in 2025 legislative session, four bills that were either initiated by us or working closely with some of our coalition partners who initiated them. And so last year, one of them was legalizing two accessory dwelling units on all single family lots in most cities statewide, and a middle housing bill that legalizes up to fourplexes in most cities statewide near downtown areas and single family lots. And then in 2025, we expanded the ADU bill to unincorporated county land, and a couple of process bills, one that allows for third-party site plan reviews under certain conditions, another that requires cities to provide pre-approved plans, and then a uniquely Arizona issue of making it so that cities can't prohibit construction work hours during the coolest parts of the day in the summertime, a heat safety issue. And then we had other bills that didn't make it. So I just wanted to highlight two bills in particular. The first one is our ADU bill that last year was in big cities, and then this year was expanded to counties. And of the ones that passed, I think that's the potential to have the biggest impact, as we'll hopefully have time to talk about later with California's experience. A lot of that kind of depends on the implementation phase. To see how many ADUs actually end up being built, but there's huge potential there. It just unlocks a lot of potential land and a lot of potential existing building space that can be converted to new homes. And then one more bill that I wanted to highlight actually didn't pass, and that is well, it did pass, but last year it was vetoed. And that is the Arizona Starter Homes Act. So we introduced it both last year and this year, and that was a minimum lot size reform bill, among other things. So it was amended down quite a bit, but it made it so that cities can't require large minimum lot sizes, can't have very specific aesthetic design requirements, can't indirectly require HOAs through shared features and amenities, that kind of stuff. And so last year we made it through both chambers of the legislature, and then it was vetoed by the governor. It was a wild ride, and then we reintroduced it this year and got it through both chambers of the legislature, went back to the House, and then ended up in some stakeholder processes, and it didn't move forward. But Texas actually introduced similar legislation that was modeled, at least in part, after our starter homes bill. And they actually did get it passed and signed by their governor. So one of the great successes is seeing how the work in one state can influence other folks around the country. So that's a success.
Thanks, Karen. We'll touch on how other states are looking to their counterparts to pass legislation there too. I want to kick it over to Michael about what California's been up to. So in your mind, what has been the most significant change? I have an idea of what some of those might be, but why don't you go ahead and let us know?
Yeah, thanks, David. And in fact, we're still celebrating here in California since just the end of June, AB 130, which was a budget trailer bill, which was a major a CEQA reform for us. CEQA is our, as you know, our major environmental law that's often been used and abused to stop or delay housing. And so this has really been a 10-year process at work with an informal statewide coalition of housing advocates and lobbyists. And it really began, actually, Ben was our state housing director there with Governor Brown when this really began. So Ben, want to celebrate with you on this call as well. But in 2015, 2016, the idea of by right approvals, get the properly zoned adequate sites, and then they have to be approved by right if we've done that. And we really needed the state preemption because there just weren't the right incentives at the local level in most of our jurisdictions to approve housing, unfortunately. And so we really were able to cultivate some legislative champions over that time too. And then as Governor Newsom then came on, has been a major champion of these types of reforms as well. But it's taken time to work through concerns of stakeholders and address concerns to the extent that we could to be able to get the legislation passed. But it really creates that type of consistency, predictability, that we need at the local level to be able to move forward with the housing, knowing that once we follow those rules and you've got the properly zoned sites, you're able to move forward. And so that we're really, really thrilled to have that finally signed. We think it's historic, and it really wouldn't have happened, as I say, without the intervention of the governor, along with our champions, Assembly Member Buffy Wicks, State Senator Scott Wiener, the speaker, Rob Rivas, has been a great YIMBY champion as well. And forcing that negotiation through the budget is really what finally got that done.
Thanks, Michael. And I recall the words of our former governor, Jerry Brown, that CEQA reform is the Lord's work. So it's kind of incredible to see
We're all in the vineyard.
quickly that's changed in California. So I want to stick with you, Michael, because we're coming up on roughly 10-ish years of California passing significant reforms, particularly around land use. And as I have conversations with people around the country who are looking to do similar things, everyone wants to know what has worked in California. And so from your perspective, given that we have roughly 10 years of bills being passed, what is really working, and what's kind of left to address?
Yeah, as I said, the by right approvals that really began with what was SB 35 at the time that was passed in 2017. It began this movement with Senator Wiener as the author of that. But that model was also applied, for example, to accessory dwelling units. And over time, we've continued to perfect those laws, of course, and you always need cleanup legislation and to address concerns. But having that model, and then when Governor Newsom brought on the Housing Accountability Unit, HCD, we really began to enforce state housing laws, both from the governor and then our Attorney General Rob Bont has been very excellent as well. I think that really makes a difference to be able to make sure we're enforcing at the local level the laws that are passed, because implementation is really key to this. And so we've used that model. There's also missing middle bills that have been passed to be able to do up to 10 units on a site, and trying to do some of these those types of interventions. On the permitting side, once you get your entitlements, you also need to make sure you're able to get your permits in time. And so putting shot clocks on permitting to make sure that that's happening in a timely manner as well. We're trying to do what we can. Our coalition is really focused on reducing the time and the cost to build housing. Cost of construction is a major issue. I know you've got a panel falling on financing, so I won't touch a lot on that. But there are other cost drivers you've worked on, like we've eliminated parking minimums near transit. We think that's a good urbanist policy, as well as reducing cost of housing and be able to dedicate those sites to more housing and less parking. That's been really important. We continue to look at development impact fees, which in some jurisdictions are very excessive, and really serve as a barrier and really determine the type and the cost of that housing that will be built if any housing does get built in those areas. That's been a tougher one to work through the legislature, and just concerns about the way Proposition 13, which is our property tax laws in California, how that works and limits jurisdictions' ability to raise revenue. So they want to pack on, a lot of these fees up front on housing, unfortunately. And then providing some guardrails for those, I think will be important for us going forward, as well as with inclusionary housing requirements, which can work in some circumstances as long as you have the right mix of the percentage of the affordable units that you're going to provide, and then the depth of affordability that you're providing, to make sure that you're not making projects infeasible because of excessive requirements placed on new construction.
Thanks, Michael. Appreciate that. And just a quick reminder to the audience, if you'd like to ask questions, please use the Q&A function. We'll hopefully have some time at the back end to get to some of those. So Kieran and Maurice, California has been passing laws for 10 years, and it sounds like both of your states have been doing similar work in recent years. And so what I'm really curious to know from both of you is, what kind of lessons did you take from your neighbor to the west on not just like the kinds of policies, but maybe the politics around getting some of this stuff introduced and passed, or like good lessons or bad lessons? What have you seen here, and what have you been able to take back to your states?
I've had my eye on California since before I worked in housing policy. So it was actually AARP California's like YouTube series that introduced me to the concept of middle housing, um, of missing middle, and got excited about some stuff and prompted me to research further, back before I even formally worked in housing policy. And so on the policy front, I had read a lot about some of the successes in California. That's one of the reasons that I thought that accessory dwelling units would be such a promising reform. I assume most folks on the call are fairly familiar with the issues, but just for those that aren't, about 3/4 of residential land in most major cities is zoned exclusively for single family. Usually those are the most desirable areas. So, typically we often see this pattern where we have big single family houses and then apartment buildings, often in different areas. So, choosing ADUs as a policy area was something that California, among other states, inspired in me, because the benefits of people being able to choose the location that they want to live in, have more choices of housing type, and more variety of who builds the housing. And we also learned from if if you read our ADU bill, it has this funny sounding like long laundry list of things that cities can't require. And basically we took everything that we had ever heard of a city that, or a state that passed ADU reform, everything that we'd ever heard of a city doing to get around the law, and we put it in the state bill saying they couldn't do this. So a city can't require a fire sprinkler, a city can't require additional parking. There's some other ones that are more specific. And a lot of those came out of California. So it was a big influence on the policy front. On the politics front, our politics are very different than California. So I have not followed super closely the political strategy, but I would guess that our political strategy was probably quite different. We're a purple state, so we had a really wonderful bipartisan coalition, really wonderful legislative champions on both sides of the aisle who care deeply about the issue. And then I want to give Maurice a chance, so I won't get into it in detail, but the space that I'm interested in exploring further moving forward is actually implementation. So I know that the Casita Coalition in California has done some great work around that. And another reason that California led me to believe that ADUs were a scalable solution is that after some of California's reforms in 2022, I think it's almost a quarter of new homes in Los Angeles were accessory dwelling units. And my understanding is that was in part due to some of the implementation work that the Casita Coalition and others have done, which I'm excited to learn more about, because oftentimes after you pass the bill, there's huge variation between states that have passed ADU reform in how many units get built, because there are other barriers, or because of the types of things that cities might do to get around the law. So I'll go ahead and kick it over to Maurice.
Thank you. Yeah, so like Arizona, we're a purple state, and so what we have done over the last, I would say, roughly 7 to 8 years is we've looked at, from a regional perspective, what has worked for other states. Of course, we have looked at California and what they have been able to do when it comes to housing. And I would say the one thing that we was able to pull away, and this was passed for us back in 2019, I believe, was the use of transferable tax credits. And so we've been able, over the last couple of years, to be able to refine it, to grow our own program around ground leases and expand it, transferability. And so that has been great for us. We've been able to, since 2019, we've been able to put in stock roughly 1,500 to 2,000 units over that time frame. And then on top of that, when we were able to get awarded with 500 million through our ARPA funds back in 21, we were able to obligate pretty much majority of that money to go towards more housing. So even with that extra money and with the state tax credits, that the monies that came in, we're going to be able to build roughly about 3,400 new affordable units throughout the state by the end of 2026. Through this session, the by right zoning on commercial corridors, that was something else that we looked at California, and that was something that was similar to what they were doing. And so that was embraced by us. And so again, we're looking at what is happening around the country. We're trying to see what could be used here and how we can mold that. But Nevada is in a unique situation, having being a state that is built around gaming and mining for the most part. We have no state taxes, and so therefore we have to be very creative in how we go about funding our affordable housing development.
Thanks, Maurice. I appreciate the focus on financing challenges and strategies, because that's one of the reasons why we're having this conversation today, and kind of leads me into my next question is, both market rate and affordable housing development has become increasingly challenging, particularly as costs continue to rise across the board. And so I'm curious how each of your states has worked to fill the financing gap, or just think creatively about new ways to get deals done in an uncertain and high cost environment. Maurice, we kind of heard some of that from you now about Nevada. I'll start with Michael for that one.
Yeah, in terms of, trying to make the financing work, I had meant to also mention our work on state density bonus law to try to get additional, projects that additional density and some concessions and incentives in terms of development standards as a way to make projects pencil. It still obviously doesn't overcome all the financing challenges, but that can help. We actually now have up to 100% state density bonus in California for multifamily developments, and passed that last year. We've also, of course, looked at tax abatement. There are various models out there that can work on when there's a public-private partnership, but because of Proposition 13, again, it's hard for us in California to enact some of the same types of tax abatements like, New York City, for example, and some other states who've been able to do that. So we have to find other ways to make the financing work. I think on the affordable side, one of the highlights over the past really 7 years, I guess, during Governor Newsom's time as governor and the legislature, they've taken out of the general fund $500 million commitments to a state low-income housing tax credit to supplement the federal LIHTC program as well. Now we still need our loan programs, of course, at HCD, and we'll need to run another statewide bond here soon, which has been the way we've typically, for the most part, funded the loan programs at HCD. And then, of course, we've also got a reauthorization of cap and trade, or I guess now cap and invest, it will be called, where we can take proceeds from that program to help finance infill housing and housing near transit, et cetera. So those are some of the things that we're looking at. I also wanted to just call it a bill that Senator Dave Cortese is running this year, SB 750, which would provide a loan guarantee that CalHFA would provide to housing projects, and as another way that on the margins could help with financing. I thought that was a pretty creative idea that Senator Cortese had brought forward.
Thanks, Michael. And Kieran and Maurice, if you want to add anything else about how you guys are approaching these challenges, let me know. And then, in addition to this, I think this ties into a broader question I had, which is regarding what's happening at the federal level. So, as all of us probably seeing, there's been some proposals to eliminate a lot of the different funding sources coming from the federal government, particularly from HUD. At the same time, there has been an expansion of the low-income housing tax credit, which is the primary means by which affordable housing gets built. So I'm also curious how all of you are approaching the really the changing landscape at the federal level and what the implications are for each of your states and how policymakers may be considering adjusting given those dynamics. I'll throw that out to anyone who wants to start.
I'll jump in. For us, from a federal perspective, we're still in a wait and see approach as to how it will ultimately affect. I mean, at a high level, we know that without the funding coming in, it's going to hurt where we're at. For those that don't know, with Nevada, um, we have 80% of our land is landlocked, number one. Number two, which is most in the country. I think second up is Utah with like 63% of their lands is federally managed. Number two, we're just now moving into the affordable housing space where we're looking to grow and expand, but we're still short 80,000 units from the National Low Income Coalition as what they have reported. When you look at that in its totality, even with the market rate, we're roughly short about 130, 140,000 units altogether. So, with the changes that are going on at the federal level, it's definitely going to be an impact. And even when you look at it from the perspective of if they continue to cut, the monies for SNAP and Medicaid and things of that nature, that's going to have a detrimental effect on our state as we will have to, put funds into that, and that will limit what we can do in regards to housing going forward. I've been a resident of Nevada, Southern Nevada in particular, for over 20 years. When I came here, our state population was roughly at about 750,000. As of today, we're at a state population of 3.4 million people, with Southern Nevada being over 2.3. And on top of that, we are in the bottom half of pretty much every major category when it comes to education, housing, Social Security, Medicaid, agricultural, everything along those lines. And so, again, to my point earlier, we grew so fast that we didn't have the infrastructure to continue to do or to build or be able to catch up with our growth. And so, with all of that, if these changes within the structure of being able to fund our folks here in Nevada, it will ultimately hurt us moving forward.
I can say a little bit for this question. As I shared with you before we started, the finance side of things and the federal side of things is a little bit outside of my wheelhouse. So this might be a little bit of a cop-out, but I think it's true, so our organization, Arizona Neighborhood Project, has focused so far quite narrowly on reforming existing laws to make it easier to build housing, so specifically things like zoning codes and building codes. And we haven't expanded into looking at the finance side or subsidized housing or LIHTC or any of that kind of stuff. And what I always talk about is that the types of housing that we're trying to legalize, and the types of housing that have been regulated out of existence, your ADUs, your missing middle, tend to be, in most contexts, the cheapest types of housing to build per unit. So regardless of whether it is people building it on the private market, or you're subsidizing it, or having some kind of other program, regardless of who is building it and who is financing it, whatever pot of money it comes from, that money's going to go further when these types of housing are legalized. And I always just think about how, if there's less money to go towards programs that help folks who need help with funding for a place to live or with building housing, then we need to do more with less, which means that we need to think about legalizing less expensive housing types, which is obviously not going to fix all of the problems. There's still a role for those things, but it just further emphasizes the importance of the regulatory reforms also.
Yeah, agreed. I think regardless of the topology we're talking about, I think being legal to build is kind of a foundational piece of this. Michael, so same question to you is, how's California has, in particular, governor has been very vocal in standing up to a lot of the changes that are being handed down from the federal level, particularly from the administration. So I'm curious from a housing perspective, how lawmakers are looking to respond to some of the changes we're seeing.
Yeah, at first I would say I've spent some time talking to our housing authorities and our affordable housing developers, and obviously we think the strengthening of light tech is positive, but other concerns just about voucher program, project-based vouchers, which are often used to help finance affordable housing, HUD staffing, home and CDBG, looking at the budget there, the 202 program for senior housing. And I also made a note about the RAD program and the potential there to renovate public housing, which has been important, particularly for San Francisco, for example. But I think the state's going to have to step up. That's why, for example, I had mentioned the Cortese bill, where we're going to do the credit enhancement at the state level, and I think we're going to have to really insist, whether through cap and trade funding or a bond, that the state's going to have to really step up to help fund. And then we've also put some pressure on local jurisdictions to try to pass local measures for housing as well. Historically, for example, San Francisco has done that, San Jose, and to help fill those gaps in the capital stack to finance these deals. That's going to be really important. And if we're going to really demonstrate the blue state values, then we need to be able to make those investments, I think, at the local and state levels, even when we may be somewhat abandoned at the federal level, which really is not that new, because we really had felt that, I think, since even the Tea Party takeover, more than 15 years ago, where there was a real retrenchment and a stepping back from a lot of the federal involvement in housing. And that's why I think most of us had shifted most of our attention, both in terms of policy and in funding, to Sacramento and away from DC. But that doesn't mean we give up on that advocacy at all. I think it's really important, of course, in the work that you do in Washington, DC, and others who want to be very, very supportive of that, because times change. New Congresses are elected as term presidents, and so it's always the long game in that sense, and that's how housers are with everything, right?
Thanks, Michael. I have one kind of rapid fire question for each of you, and then I want to get to some of the questions in the Q&A. But we talked a lot about what has been done, what's being done right now. But for each of you, is there a policy that you're particularly excited about pursuing in your next legislative session, or through other means? So I will go ahead and put that out to anyone. What are you looking forward to most moving forward?
I could jump in. I'm also really interested in affordable home ownership opportunities, particularly the very expensive coastal communities where we don't have a lot of that. And so been tracking very closely Colorado's construction defect warranty program that was just adopted. We'd also been looking at the British Columbia model too. And then also kind of a deposit reform, where deposits could be used to help finance condos if we provide the right consumer protections in terms of a completion bond, et cetera, to find ways to really to be able to build more affordable for sale opportunities for California. So I'd like to continue to pursue that in the next year or so.
I would say for Nevada, we're definitely looking for additional revenue sources so that we're able to continue to build, number one. Number two, preservation is going to become a big thing for us, as we have had a lot of buildings that are starting to term out and the tax credits are up. And so if we're able to create funding to keep these older buildings and rehab them and keep them affordable for our individuals and families that are in need of housing, I think that'll be a huge win for us. Going into our 27 legislative session, that is going to be a big tick for us.
And Karen, what are you looking forward to? Can we surmise that there could be a different or revised version of the Starter Home Act in the near future?
We're still figuring that out. We're still working on our legislation for next session. We've also expanded to do more work in cities and counties, and have some local officials who have been more proactive and expressed interest in substantive reforms, in part in response to some of the state level work. So we're somewhat optimistic on that front. We're sort of in a planning stage right now for some of our next big policy reforms, whether it will be like building upon some of the stuff we did before or something different. One thing that is really at the top of my mind, which is not as exciting and flashy of an issue, but has come to top of mind for importance, is some of the process issues. Just with, one of the things I think about a lot is who's building housing. And so is it only your big builders who can navigate the process, or can somebody, an individual startup company that wants to build, little duplexes or ADUs, or can grandma navigate this? And just anecdotally, trying to build an ADU myself, I've been a little bit surprised by how onerous some of the process issues are, and kind of gotten some sort of firsthand experience with what some of that looks like, also from some of our, and then also some of our bills this year that might want to build upon. So we might be exploring, talking to some folks, kind of seeing what can be done on that front, either policy-wise or just on a practical level. I'm also super interested in at some point expanding, to looking at things beyond housing, like neighborhood cafes or that kind of thing. There's also seems to be a ton of interest. We haven't engaged in it as an organization so far, but I can't. Every single week somebody asks me about single stair reform. It seems to be like very in vogue. So yeah, we could do any number of things next. It is TBA.
Thanks, Karen. It sounds like we have a lot to pick from, so that's exciting. I'm going to go to the chat now. We have a couple questions. I'm going to start with this one, which is directed specifically at Michael, but I think anyone here can kind of jump in, specific to missing middle. We've had a couple missing middle bills in California. Outside of the ADU bills, we've had Senate Bill 9 and Senate Bill 10. And I think the jury's still out as to whether or not those are working as intended. And so, Michael, from your perspective, what needs to change to get those kind of working as lawmakers had anticipated? And then, Maurice, Kieran, if you want, what have you taken from California's experience with things like ADUs and duplex lot splits, and tried to apply them to your own states, or not apply them, right? Not everything that comes out of California is the best practice. Sometimes you learn the opposite. So curious from that, your perspective too, but I'll start with Michael.
Yeah, I think unfortunately, this is the nature of the legislative process. I think it was a major victory to get SB 9 passed, but there was also lots of opposition all the time. We knew we'd have to come back and continue to clean up. And there were also politics involved about various deals that were made with legislators about not changing the law, et cetera. And so there's still certainly more to do. And local jurisdictions found ways to put up roadblocks, keep increasing setback requirements, for example, to make sure it was infeasible to build. I did want to call it a couple cleanup bills that have been passed since then. To that question, SB 450 last year. I can actually put this link. It's on the California MB website. They had sponsored these bills, but SB 450 was to try to address some of those concerns with the limitations around SB 9. And then SB 684, a Senator Caballero bill, was also passed that allows for infill developments of 10 homes or less in multifamily zones. So I'll put that in there for folks to follow up and see some of the details, but we've got to continue to work at these pieces of legislation, and work with our architects and developers on the ground to see what's happening there, what's working or not, and how jurisdictions, quite frankly, are processing these, because some of those bills they were just passed. The planning and building departments are still working through the issues, and we have to create a whole kind of a workforce and contractors, small contractors who are also willing to do these types of projects. And so that's why it takes time on the implementation side. Yes, perfect the bills, but also kind of build the workforce that's going to be able to build these types of projects.
Yeah, and for us, I'll go back and highlight Assembly Bill 540, the Governor's Bill, the Housing Attainability Act. That bill was specifically targeting the missing middle. And so sort of like your starter homes, we want to bring back that concept. having folks be able to create generational wealth or have the opportunity to create or start generational wealth. And so that bill in itself, of course, 100 million will not buy a whole, is not going to fully fund projects, but it will act as grants and loans, short-term loans for developers to be able to use. And so we're expecting for that to, be able to house roughly about 5,000 to 7,000 Nevadans over the next few years. And so, initially, due to budget that we initially wanted close to 500 million, but due to the budget crisis going on within our state, we had to reduce it to 133 million. But again, we do have $50 million coming from our finance agency that will contribute towards the development of new homes coming online. And so, we're excited about that. We're actually having a bill signing tonight. And the monies will start flowing to the communities within the next quarter or so. And then regards to ADUs, we actually had another bill, Assembly Bill 396, I believe it was, that for our jurisdictions throughout the state that has 100,000 or more residents, we are allowing residential properties to be able to put or create or develop ADUs on their properties. So again, just to highlight a few of those, again, we're moving in the right direction. However, with the lack of revenue sources, I don't know how much more we can do without being able to get more support from the federal government.
I'm so sorry. Can you repeat the prompt?
Yeah, so just really about missing middle. Part of it was specific to California, SB 9, SB 10, the duplex 10-unit bill. Just what have you taken from that, and what do you see as being potentially successful? I think a lot of the Starter Home Act draws from some of those lessons in California.
Yeah, so we actually had a missing middle bill in Arizona last year. So when we introduced it, it would have, in cities above a population threshold, legalized up to, I think it was 4plexes on all single family lots. It got narrowed in stakeholder negotiations to where it's just basically single family lots that are near downtown areas. And but it's still significant because it at least gets that framework in place that we can then build upon. So we're hopeful for being able to expand upon it. But even states, as you alluded to, who have passed bigger middle housing reforms have seen some of them have seen barely any units built at all, particularly if they also have ADUs legalized. So I agree with some of the things that the other folks were talking about with the implementation piece in terms of, one of the things that I think a lot about is that, oftentimes legalizing something or doing the zoning reform is necessary, but not sufficient. Like it's still super worth doing, but then you have to sort of figure out what the other barriers are. And either let the market kind of naturally allocate itself to, have people fill in that gap or help to address the other barriers, whether that's financing that makes it not pencil, or you don't have an ecosystem of small developers who can build the stuff. So that's something that's definitely on my radar a lot. It's outside of our wheelhouse so far as an organization, but from what I've learned from talking to folks in other states, it is important to the success in a lot of cases. I know that I think South Bend, Indiana has done historically some really good work on the front of what Michael was talking about with kind of cultivating that ecosystem of small builders.
Yeah, and I'll call out just because that was part of the question. Portland, Oregon, the residential infill program, I think, has been pretty successful early on in getting some of that missing middle built. But we're out of time, so I'm gonna leave it there and give a big thank you to all of our panelists. Thank you for sharing your insights and expertise with us, and just for the work that you do in general. I appreciate you being with us today. So now moving to the next portion of our event, it is my pleasure to welcome Kelly Gear, who is a Senior Vice President and Chief Strategy Officer at the Federal Home Loan Bank of San Francisco. Kelly is responsible for overseeing the bank's corporate strategy, community investment, and program management departments. She joined the bank in August 2011 as Vice President of IT Planning and Program Services and has over 25 years of management, consulting, and organizational leadership experience. So we are thrilled to be co-hosting this event with FHLB and to have Kelly here to share some insights. So Kelly, I'll hand it over to you. Thank you again.
Fantastic. So first of all, I just want to also echo and thank you, David, and also the panelists. It was really interesting to hear the perspectives and some of the progress that you're making across all three of the states that obviously are near and dear to us. So thank you for that and definitely appreciate it. And I also just want to thank, Terner for putting this together and co-hosting it with us. So I'm Kelly Gear, and I'm really happy to be here to represent the Federal Home Loan Bank of San Francisco and really to lead our support for this important convening. So I think it's pretty clear from the panelists this morning or earlier that we're here really because we understand that there is an urgent need to address this housing crisis, and that's really at a local level, regional, as well as national. We also know that we need to increase housing supply. Communities cannot thrive without a range of housing options available to families and individuals, and really across all levels of income. So to this end, working together to catalyze both community investment, but also policy reform with the private and public sectors, financial services, affordable housing industries, nonprofits, and academia, really sitting at the table together is key for this to come to success. The Federal Home Loan Bank system, 93 years old this summer, is made up of 11 regional banks across the country. We're not well known by the general public. However, we are an essential part of this country's financial and housing finance system. We're privately capitalized and cooperatively owned wholesale banks that enable a healthy financial services sector by supporting local lenders. We have a dual mission, which is both to be a reliable source of liquidity that keeps credit flowing in our communities and to provide resources to support housing and economic development in the communities we and our members serve. Together, the 11 regional federal home loan banks are one of the largest private sources of grants supporting the development of more affordable rental housing and enabling homeownership in the United States. Each federal home loan bank contributes at least 10% of annual net income to our affordable housing programs, also known as the AHP. AHP grants are a well-known source of critical gap funding, dollars that are an essential piece of the total capital stack for an affordable development. With funding from our AHP, our members also deliver down payment assistance grants to home buyers, making sustainable home ownership and wealth building possible for thousands of families and individuals in the communities our members serve. In 2024, we allocated $93 million to our AHP and other community grant programs. This year, we are also using the authority that the federal home loan banks have to make prudent investments in mission-consistent securities to invest in bond issuances that enable continued affordability of rental units or support affordable home ownership across our three-state district of Arizona, California, and Nevada. But the housing crisis we are facing is not only about financing solutions. We're also at a crossroads when it comes to policy issues that can either hinder us or move us closer towards that goal. Our collective imperative of solving some really intractable problems. Events like this are opportunities to explore thoughtful, informed, and innovative approaches to making it possible for everyone to have a place to call home. I really want to thank all of you for being here today. I'm now honored to turn it over to Jonathan Fern, who is the Senior Vice President of Development for the Signature Development Group, an Oakland-based development firm specializing in the acquisition and development of commercial, residential, mixed-use, master planned, and adaptive reuse properties. Prior to his current role, Jonathan was head of development of Oak Impact Group, a locally based investment and development firm, and has spent over 15 years in institutional scale residential development. Jonathan recently completed a 7-year stint as a member of the Oakland Planning Commission, and he serves as a board member of multiple housing organizations. Jonathan will be moderating our next panel focused on exploring housing finance in an uncertain economic and policy environment. And I also want to just do a really quick shout out to one of the panelists, Laura Archuleta, who's a valued member of the Federal Home Loan Bank of San Francisco's board of directors, as well as president and CEO of Jamboree Housing Corporation. So thank you all to our next panelists, and I will turn it over to you, Jonathan.
Thank you so much, Kelly. Really appreciate it. It's great to be here and great to be moderating this very interesting panel. So as you mentioned, we're going to try to get our feet on the ground and assess the financing landscape from those that are actually doing the implementation of some of the laws that we've heard in the prior panel. So we're going to talk about some current challenges and opportunities, making projects pencil, and then understand how some of the changes that are happening at the state level, federal level, are kind of changing the environment that these folks are experiencing in their day-to-day lives. So I want to introduce the panel. First off, I want to continue with the shout out to Laura Archuleta, who's president and CEO of Jamboree Housing Corporation. Excuse me, hold on a second. In this role, Laura leads the development, acquisition, renovation, and management of affordable housing across California. And under her leadership, Jamboree's portfolio has expanded to $3.2 billion, providing more than 11,000 homes for over 24,000 residents. And in addition to being a board member on the Federal Home Loan Bank, she's also a founding member of UC Irvine's Livable Cities Lab. Next up, we have Jim Hyde, who is an infill developer and sustainable development advisor based in Sonoma County, California. He's the founder of Urban Green and Craft Development and has over 40 years experience as an urban designer, land planner, sustainability strategist, and infill developer. He's also the author of Building Small, a toolkit for real estate entrepreneurs, civic leaders, and great communities. Last but not least, we have Cindy Sivek, who's the West Region Market Executive for Community Development Banking at Bank of America Merrill Lynch, where she manages a team of community development experts who provide financial solutions for affordable and mixed income housing projects. She has over 30 years experience in underwriting, originating, and managing financial products for a wide array of real estate developments, including multifamily housing, for sale housing, social services providers, and quasi-government agencies. She also serves as a board member of the National Equity Fund and Abode Communities. So thank you all for being here. Really appreciate it. As mentioned, we're going to try to get into the nitty-gritty here. But I think, to kind of level set, I think it'd help everybody to understand kind of what life is like from each of your desks. Developers love certainty, and we're certainly not in a certain world right now. There's a lot of change happening, both good and bad. So on a scale of 1 to 10, and I'll ask each of these questions, a scale of 1 to 10, 1 being you got more deals than you got time to do, and 10 being you're not doing any deals. How would you describe the current environment and why? So Jim, let's start off with you.
Thanks, Jonathan, and thanks for the opportunity to be here. It's really going to be a fascinating afternoon. I would say, well, first of all, as a developer, you're always an optimist. It's the only way you can survive the business. And I think I'm probably closer to the 10, not a lot of deals flowing through right now. And again, as you noted, my work is very, very fine-grained, very small. But I'm very optimistic, probably more so than I've ever been in the last 5 years, capital side, by what's happening in the legislative environment or the policy environment. So we'll talk a little bit more about that. But I feel like after 7 years of making sausage there in Sacramento, of actually getting to a place where we've got some tools that might serve the small scale developer to actually get some projects built and get some things done if we can just get capital to them.
Great, and we'll talk a little more about that. So Laura, how about you?
Right. Yeah. Thank you, Jonathan. And thank you for having me today. So at Jamboree, so we're in our 35th year at Jamboree, and I've been here 26 years, and I would say we are super busy turning down projects. We're probably in the 1 to 3 range. And it's a combination of things, but definitely the need for housing has reached such a high focus by political leaders throughout the state of California. We just work within the state, but we are trying to really sift through and figure out which deals make sense, which ones can we get financed, obviously, get entitled, and fit and operate. And so that's been a change. Over the last 20 years, for sure, a big change in the attention that housing gets, right? Housing is the topic. Everywhere you go, folks want to hear about what are we doing about the housing crisis, as well as we jumped in about 15 years ago into permanent supportive housing folks coming directly off of the street. And so that continues to get a lot of attention. So we're very busy and excited about some of the new funding sources that are coming out. We'll talk a little bit about, and then potentially some of the future funding sources that we'll have here in California.
Great, thank you. Cindy.
Hi, first of all, thank you to both the Terner Center and the Federal Home Loan Bank, not only for putting this together and allowing me to participate, but everything that both organizations do to support affordable housing, not only with their thought leadership, but financially. We are a member of the Federal Home Loan Bank of San Francisco, and the AHP program has been so essential to many of our deals getting across the finish line. So I don't want to go without thanking them for that. In terms of, I would say we're a 1 to 3 as well. I've been in this business for 30 years. I started out with the idea that we could make a difference working at a bank to help, those that weren't able to access safe, affordable housing. And 30 years later, it's a crisis. Every year it gets worse. But I think that the positive is there's bipartisan support. What was a crisis more so on the coasts has impacted across the entire country. So there's a lot more interest. We saw that, and we're going to talk about the federal bill that passed. And then internal at our organization and a lot of other organizations in the financial private sector, as well as other sectors, are interested in addressing the crisis. So while we have been supported by Bank of America using profits for a purpose to continue to grow our business exponentially, we definitely do have some limits as well in terms of capital, but also capacity. And we'll touch a little bit on that. So just continuing to stay steady and predictable for our clients and our communities, because we know that affordable, safe, service-rich housing leads to better outcomes. And we're happy to support organizations like Laura at Jamboree and others who are doing the real heavy lifting by sharing our capital.
Great. That's fantastic and great insight. I really appreciate that. So to touch on something Cindy said, Laura, this has become a nationwide crisis. I think that's apparent. It started as a kind of coastal issue, but now it's obviously penetrating into the heartland. And we saw that in the passage of the One Beautiful Bill Act, where there was bipartisan support for low-income housing. So can you talk about, it was what I've heard is that it was somewhat revolutionary in terms of what was unlocked as it relates to affordable housing finance. So can you talk a little about what the OBBA did and what you see as some of the opportunities there?
Yeah, absolutely. So, affordable housing over the years, it can be a partisan issue, although it really shouldn't be. And I think the low-income housing tax credit is one of the areas that has gained, bipartisan support. And for years, we've worked as an industry to try to make some tweaks and changes to the program in order to produce more housing and to preserve housing, existing affordable housing. And we could not get movement on some of the changes that we needed. And this year, that those changes were put forward in the Affordable Housing Credit Improvement Act, and they were many of them incorporated in the big beautiful bill. And it was I think surprising to some of us, because I don't think that necessarily the administration was coming out with a very strong affordable housing message. We still were holding our breath on some of the other funding programs, right, that come out of Washington. But this change really will have a direct impact on the new construction and the preservation of affordable housing units throughout the country. We see the restoring of the 25% cut to the housing credit allocation, and increasing the annual housing credit allocation by 50% over its current levels, phased in over the next 2 years, as well as then the change to the private activity bond requirement, the threshold moving from 50% to 25%. Both of those changes should result in about 200,000 new affordable homes in California a year. That's huge, right? That's a huge impact here for our state. And I'm sure in the other 2 states within the Federal Home Loan Bank region, right, you're going to see quite a bit of increase. So these increase in tax credits should cause projects to move forward much quicker. I know as a developer, we're looking at everything we had in the pipeline, as well as our developments that need resyndication. They need some investment. At how quickly can we get those into a bond round? How quickly can we move forward? So we're very excited about what we saw come out of the bill. And I think some of us were a bit surprised because we've been working on it for a while, but you never know, I guess, where it's going to come through. So congratulations to everybody that worked on these changes.
Yes, definitely stars can align in some very interesting ways. Cindy, what do you see as the effects of the passage of that bill from kind of a lender perspective and maybe a tax credit equity inspector or investor? How do you see it?
Yeah. So one, I do want to give a shout out to all of the organizations that worked. I mean, it's very hard. It takes a village, and then getting the village to agree on what they're going to focus on and on the Hill was very challenging. But I think the success was that they were very targeted with the, reducing the 50% test and increasing the credits. So I think that really was the secret sauce that helped pass. So shout out to everybody. The tax credit business is a supply and demand equilibrium. And that's how the price of the credits get set. And yes, like investors will look at the treasury, and yes, investors have each of their own black boxes of how they figure out how they're going to price credits. But ultimately, it's what's the demand and what's the supply. So the big beautiful bill really did a great job increasing the supply, as also making it a little easier for the program itself. And then the question was, well, where's the demand going to come from? The majority of the demand historically over the last years have been because the price of credits were so high and the returns low, were big banks and smaller banks through multi-investor funds for CRA. Recently, there's been an increase in interest and investment from other industries. It's not great to have one industry be your whole client base for credits. So attracting new industries, either bringing in industries that invested in the past, like insurance companies or others. And then shortly after the bill passed, last week, we heard from the Federal Housing Finance Agency that there was an announcement that they approved doubling the amount of credits that Fannie and Freddie can buy, which is a big move towards helping go towards an equilibrium. So each of them can now invest. It was doubled from 1 billion to 2 billion. So now 4 billion a year. That's their cap on investment. And so again, moving us towards a better equilibrium in terms of supply and demand. the devil's going to be in the details of how they end up deploying it. Half of the increase is going to go towards difficult to serve light tech markets, and of that portion, 20% is reserved for rural communities. So I don't know the details. We'll be hearing a lot about it on the conference circle, but how they implement that will definitely have an effect on stabilizing pricing from a standpoint that we'll have this big increase in demand. I mean, in supply, and now we'll have an increase in demand from Fannie and Freddie. So stay tuned for all the developers. I think that we're probably in a better place in terms of the pricing moving so significantly.
Excellent. Thank you. Laura, as we know, tax credits are just one piece of your capital stack. So, most affordable housing developers are cobbling together a number of different financing sources. So can you talk about some other federal programs? I mean, we touched about it on the last, a little bit during the last panel, but things like Section 8 and home funds, I mean, those are fairly important funds for affordable housing developers. Can you talk about the potential impacts to those as well? What you're seeing there?
Yeah, I mean, that's definitely, I think, where we're now holding our breath to make sure that those programs are not going to continue to be cut as they have, over the last few years. It seems like we're seeing a continued reduction. Our local housing authorities are struggling to come forward with project-based vouchers to help facilitate our special needs housing. Between the project-based vouchers, the home funds, and the CDBG funds, that's what Jamboree really looks to help fill the gaps. And it will be, difficult to keep those funding levels up. And honestly, those funding programs do not have the same bipartisan support in DC. And so that's where you see some of the cracks in the affordable housing formula, if you will. So we're trying to stay positive. We're looking at, maybe other ways to help fund the gap. If you can't get a project-based Section 8 voucher, maybe you capitalize a reserve. And so you use capital funds somehow, to cover those operating expenses and those services costs. But we're watching it, and we'll see. But we're going to continue to, again, stay positive and advocate for those resources.
And can you talk a little bit about the state? And I know that the state in California has obviously prioritized that. We talked a little bit about the $500 million, I think, that the state is putting forward. So what are some of the state resources that are coming to bear? And is that a replacement, or how does that play into the potential loss of federal funds?
Yeah, it's we look at everything. And so again, having been doing this for quite some time, people will ask about whether it's legislation, it's a funding source, it's local, county, state, federal. Every single stone has to be, turned to find what we need to make each deal. And each deal is a little bit different. But here in California, we have been fortunate to have funding allocated for affordable housing, not at the level that it was way back for those of us that remember redevelopment, but in a way that it is still very impactful. And so for Jamboree, we received over $100 million in the Home Key program to acquire developments and acquire properties and turn them into permanent housing. So we have about a dozen of those developments. The Mental Health Services Act funding that was enacted years back, kind of known as the millionaire's tax, that funding helps fund our special needs developments, the No Place Like Home funding, the multifamily housing program, MHP. So the list goes on. There's about a dozen different programs that we go to the state for. It could be anywhere from $1 million across, our development pipeline to, tens of millions of dollars. But the states, California has stepped up this year. We were very nervous going through the budget cycle We initially did not think that there would be the funding that we had hoped for, but in the end, we were able to secure the $500 million in the state low-income housing tax credit, as previously mentioned, as well as $120 million specifically for the MHP program and $500 million for the homeless housing assistance and prevention program. So those funds lasting through 2027 will go a long way. We do have, our eyes set on a bond, as Michael Lane mentioned previously. We can talk more about that if there's time, but it is going to take additional investment to continue to produce housing at the level that's even, I was going to say what's needed here in California. It's not even meeting the need, but just to continue to keep a production cycle going.
Yeah, it's a continuous effort for sure. I want to ask Jim a question, but before I do that, Cindy, just one last question. What do you think feel are some best practices in affordable housing finance? Like who's doing what well? What can we learn from that?
Yeah. Well, first of all, we work in California, Arizona, and Nevada. In my group, Bank of America covers the entire country, and there is a lot of good being done. And federal, state, and local funding plays an important role in creating affordable housing, especially for those most vulnerable. But unfortunately, funding is limited. And so we really need to look at reducing costs through efficiencies and faster processes. So I think there's a lot of work being done, and we're going to talk later about California specifically, but really focusing on eliminating redundancies and duplications. So where funders can limit third-party and share third-party reports, so limiting the number of third-party reports being done, focusing on predictability, especially during these volatile times. Working with partners early on, the public and private sector coming together and trying to deal with issues at a programmatic level, like making sure the tax credit code works with the private sector money, that's construction and permanent financing, and then the public sector. So dealing with that upfront, there's a lot of working groups out there that are trying to streamline things outside of a deal so that when you get to the deal, you don't get bogged down with programmatic issues. That's a great best practice. Identifying issues early and communicating often, and not focusing so much on square pegs and round holes. At this point, it's so expensive to do some of these deals and so complicated. Where you can do things more simply, do it. Try not to build the plane while you're flying it. And then I want to throw in like attracting and growing and retaining talent within the industry. So we run something called the Affordable Housing Challenge, where we take grad students and undergrad students. Berkeley participates. University of Nevada, Las Vegas won once, where they actually participate in a simulation of a low-income housing tax credit project. It's been around for 35 years. A lot of those students go on to have extremely successful, impactful careers in affordable housing. And if we're going to do more, we're going to need more people to do it. And then always plan for the worst and hope for the best. And then lastly, I think we're entering an age where everyone's talking about technology. We have invested a lot in technology. I think the industry needs to continue to look at leveraging technology, again, with the focus on how do we reduce costs and how do we expedite processes. So those are a few best practices and ideas. The other piece you guys covered in the prior session, which is the public sector looking for low-cost land, ways to address impact fees and operating costs, to just figure out how we can build quicker, less costly, and be operating more effectively. Just lower costs all around so we can build more units and house more people.
Great, thank you. Yeah, it sounds like a number of bills that can come out of that list alone. So Jim, let's turn to you. There was a lot of interest in missing middle housing in the last panel, and it is the kind of the topic of the day. You've been doing it since before it was cool. I mean, you've been doing it. You wrote a book on it a while ago. So let's talk about a little bit about that, particularly the financing piece. So as we said, we've had some wins here in the policy environment as it relates to reducing the zoning barriers and things of that nature. But as it relates to financing, what do you see as some of the best funders of missing middle housing, and talk about what that means to you?
Yeah, well, thanks, Jonathan. And I'm feeling a little bit like the outlier in this conversation, just because I am the small guy. And but I think it's really an important part of the solution deck, if you will, that we're all seeking, which is to kind of solve the housing crisis. And I think you'd mentioned earlier that this is not just a coastal thing anymore. I mean, the last couple of weeks I've been in Asheville, North Carolina. I've been in Fayetteville, Arkansas, and they are having affordable housing problems. And they're not going to be solved with 200-unit LIHTC finance things. They're going to be done in incremental ways with the smaller private entrepreneurial developer working, kind of at a fine grain within the neighborhood blocks to deliver it. And so the challenge is, how do you finance that? And I think it is, unfortunately, so many of these programs, just to paper them and get them done. I think Cindy alluded to that, the complexity, the cost to paper and get it done. These things are not being set up for the smaller scale project, which is an important part of the solution. And it used to be the community banks, but unfortunately we've lost so much of that, I think, as the big banks have kind of gobbled them up, and it just hasn't, for all the different regulatory reasons. I've been doing, you mentioned I wrote a book. I wrote the book 4 years ago. The book grew out of 12 years of going around the country and holding these conferences for small scale developers who wanted to use real estate to kind of positively add to their communities. And in the early years, it was all about community banks, and there's less and less of an option for developers. CDFIs are kind of the new thing. And we're hopeful. We're seeing some interesting things going on there as those are growing and becoming more visible. But it's still, there's still a lot of the paperwork that has to go with that. Limited amount of crowdfunding. There's some interesting platforms that have been done, and it's more sliver equity than it is, I think, a major part of the capital stack. But it at least allows the community to have a sense of authorship and ownership in these projects, which is helpful in more contentious environments to get the approvals. But frankly, for a lot of the people that I work with and know, and are kind of my colleagues in this space, it's largely friends and family, syndicated, country club money, just working through. We don't talk about capital stacks. We talk about capital cocktails, because it's a little bit of this and a little bit of that, and you kind of every time it's a little bit different. So we're still waiting for and hoping for some of the bigger solutions that could be replicable and frankly a lot more efficient. I think that's the other challenge is, as a small project, you don't have a big team. You're doing a lot of it yourself, and if 50% of your time is trying to assemble the capital, it's a lot harder to actually get the project executed. So I think we're all in search of a more consistent, reliable, transparent, efficient way to get capital into these projects.
Yeah, I mean, that's really helpful. I mean, could you imagine, I mean, what are some of the financial products that you would like to see, or you would think would have a significant impact on your ability to scale or deliver this kind of housing product type?
Yeah, and I don't know whether they're products or they're processes, but I think, the first one is solving the guarantor problem. You've got a lot of really ambitious people who are smart. They come out of the MRED programs, they come out of emerging developer programs, and they don't have the balance sheet to get a loan. And we're working in a couple of cities. We're saying, you don't have to write a subsidy check. Just stand behind the loan, be the guarantor, provide some credit enhancement. Your money will go a lot further that way. Figure out a logical loss rate and build that into the money that you're setting aside. I think the other thing that we hear a lot are just the draw processes. When you do finally get a loan, the draw process that you have to go through as a small developer to actually get paid and how long that takes, and the third party reviewers and all of that. So could that be simplified? Appraisals, that was mentioned early on in the conversation, I think in the last panel, and something that really needs a lot more work. I think just, we'd like to see, the holy grail for us that we talk a lot about is if we could get people to invest in the individual and the company as standby capital, rather than having to go through every single deal and source that each time. So if there was a standby facility that was betting on somebody who has a track record that they could draw on, I think that would be a really meaningful product for people to be able to scale and get things done a lot more quickly, and be able to focus again on what they're good at, rather than having to chase money all the time and only be able to spend a little bit on building their project.
Got it. Well, Cindy, question for you. I don't want to put you on the spot because this may not, missing middle is an emerging kind of field, but what's Bank of America's kind of position on this? Do they have products, or are they thinking about products to kind of support this type of developer, this type of development?
Oh yeah, absolutely. We're committed to supporting the development of missing middle housing. We think you need the whole spectrum, so that people have opportunity to thrive in existing homes and then choose to buy or move to a different area. So we have an equity investment non-tax credit product that can be used for the acquisition and preservation and the development of affordable housing for residents earning up to 120 area median income. It's really designed to pass through the cost savings from the bank's balance sheet compared to other equity providers to deals that are targeting this missing middle. I think the challenge, and we've done it across the country, the challenge in California has been the high cost of acquisition and construction, which just makes it hard for deals to pencil. But we're optimistic, with all of the smart people working together, both public and private sector, as Jim mentioned, some of the things that are going on, to see if there are ways to bring down the cost and make these, more developments work. We recently closed a deal in San Diego that used the state welfare exemption for real estate tax abatement. The affordability is on the lower end of the middle income bracket, but the tax abatement was key to making that deal work. And then we're continuing to look at deals and just work with clients to see how we can get these deals to work and where we can provide this lower cost equity to help get the deal over the finish line.
Got it. Interesting. Very interesting. So Jim, do you think now, as we mentioned, we've had a number of wins up in Sacramento in California to allow more missing middle. You were talking about how these unlock. Do you think the issue now is still in the zoning arena, or is it more in the finance arena? Which one which one are you more hopeful for, I guess, is the question.
Great question. And yeah, I'm a big advocate. While a lot of smart people are focused on zoning and policy, I think it's 20% of the problem. I think the other 80% is a whole long list of items that we talked, before this about defect liability legislation, capital financing, reluctant jurisdictions that you have all the tools behind you, but as a small developer, you can't afford the legal muscle to kind of force the jurisdiction to play by the rules. Subdivision Map Act. There's just a long list that if you're serious about small scale missing middle housing, and I do think it's important to make the distinction between missing middle housing, the product, and missing middle, the income, because I think Cindy, you were talking about income level 120 AMI. And I think there's a little bit of a misconception that, hey, if we can just build this missing middle product that's no longer legal, but we get it approved, it will naturally fall into that price point. And the reality is a lot of this stuff is actually more expensive to build because you have less square footage to spread over the fixed costs of things like kitchens and bathrooms and all that, plus the cost of insurance, and you're working with much smaller tolerances. one of the biggest challenges that I'm finding in small scale projects now is nothing to do with the stuff we're talking about. It's insurance and utilities. I mean, because you don't have the latitude that you want with a big lot that you do with a small lot to solve the utility problem. So there's a lot of complications stacked against you. So the policy stuff is great because it's got everybody at least looking at a solution, and it's opening the doors to creating, more product and getting people used to that. But unfortunately, as I say, it's not just change the code of the text or change the text of the code, and we're going to unleash a flurry of missing middle products, because it just kind of starts to set the table for a lot more that has to continue to be worked on with the same energy that's been placed on zoning.
Yeah, 100%. And one of the bills that Michael mentioned, and this relates to what you're saying about the Subdivision Map Act, and I'm just curious, it was 684, I think it's been replaced now by SB 1123. It basically allows for 10 units or under to be streamlined, no CEQA, I believe, in certain areas. Does that still, are you still running into kind of the same issues around insurance and utilities, even with bills like that? And that's why they're not necessarily catching on? Or is it just going to take time because these bills are relatively recent in terms of their passage?
Well, I feel like I think it's 1127 is the one that picked up 684 and then applied it to vacant single family lots. I think is a game changer. And I think finally, after all the years of fiddling with the dials, you've got something, because there's enough scale there for a developer to really spend the time and energy and come out with enough units to make it worth their while. But it's small enough and targeted enough that you'll be able to use somewhat fallow or obsolete sites in communities and actually add some interesting density. So all of those things that you mentioned will still be there, but I think there's enough there to make it worth the while to go to the effort. I mean, if you were to try to do it under SB 9 and I was only going to get 4 units and I was handcuffed by having to have the homeowner live there, it's like, why go through the brain damage? But if I can do 10 and I can, then there's enough meat on the bone to actually make it worthwhile. And ideally, it's more appealing to a lender or an equity investor, because there's enough of a prize at the end of the project to make it worthwhile for them to, again, it's really about spending the time and effort on these things. And whether you're lending money and you're having to review the reports and go through all the underwriting, and I often say in the small development world, the banks are more interested in writing $100 million check than 100 $1 million checks. And the problem is we need people that want to write 100 $1 million checks, but the industry is just not set up for that. So now if you can write 10 $10 million checks, maybe that's a little better. Maybe we can get closer to what we need to do.
Well, it's progress. I mean, that's one thing to say. So that's good. And then hopefully we keep on pushing that. I wanted to turn back, Laura. You mentioned that portion of your portfolio was with permanent supportive housing, which is housing for folks that were formerly homeless. That's a big topic. Obviously, in the state of California, it's becoming a larger topic in other regions, certainly in Nevada and Arizona. Can you just talk about some of the challenges of developing and operating permanent supportive housing? It kind of has a whole different method to it. So could you just talk a little bit about that?
Sure. Yeah, there are challenges at every section. Everything that you're dealing with in affordable housing just gets that much more difficult or needs additional attention when you're doing housing for folks living with special needs. And everything from the layers of financing, right? It's different financing, different requirements, to how you select your residents. There's a coordinated entry system that in many jurisdictions, it can be difficult. Some have it down, they know how to work through it, others don't. Sometimes you run into difficulties if you're trying to do a local preference that can be allowed, it cannot be allowed. But often when you're getting a development approved and going through the community outreach project, our community members are willing to step up and support a development for folks coming from homelessness, living with maybe a chronic mental illness or other corroborating conditions. they're willing to support it, but they want to help folks who are coming from their community. That can be difficult the way the entry system works right now. So we're trying to address that. And then the lease up process itself, if you're taking folks directly off the street, these are people that are not used to living in a unit. We had a woman move in to one of our new developments who lived in the parking structure for 2 weeks because she just wasn't comfortable moving into her unit. And so what do you need to support that? You need very robust services and full wraparound services that are quite expensive, and getting folks comfortable with funding that and operating those services. At Jamboree, we're up to about 160 or so employees, and more than half of our employees are on the services company, even though only 20% of our portfolio of our 11,000 units are set aside for folks with special needs. And so you've got your lease up is different, your services are different, your underwriting of operations is different, right? We see that if you do the development correctly, you go through the lease up, you implement your programming, and you have your staff on site right from the beginning, that within 2 to 3 years, that property stabilizes. And then it does operate very similar to our kind of our straight multifamily or workforce developments for people, lower income folks and families. So it just takes experience, care, additional funding, but permanent supportive housing is the solution to homelessness. It is much more detailed and specialized than I think many people thought when they jumped into this type of development, because funding was there, right? So funding was there, so you had people move into it. You may have service providers who don't have a development background jumping in, as well as developers who don't have a services background. We actually moved our property management operations together with our services, and we have one executive overseeing both, because it has to be looked at together, right? How do people live and flourish? What's the quality of life at our communities, and how does that impact in a positive way, hopefully, the broader community that these developments are built in? So we've seen failures in our industry in permanent supportive housing. You probably have seen some headlines and seen that, but it can be done. It's just making sure that everybody around the table brings some different expertise to it, and you put together a development that can be successful.
Okay.
Great. And Cindy, is that what you found as well? I know you've done a lot of lending with PSH. Are you finding what makes them successful is similar to what Laura was talking about?
Yeah, I mean, Laura touched on a lot of the most critical factors, and she's understating everything that she's saying. I would just add to it a few things. I mean, at the end of the day, when you look at a project that is PSH, you really need to start from the beginning. It's specialized real estate. It's not just an apartment or a housing project. And so I think you have to really look at your sources and uses and your design, from development, leasing to operations. So I'll just add to, you need to make sure she covered long-term, longer lease times, early turnover rates, operating reserves that have to be funded to match the acuity. Don't shortcut those. The service provider is essential, and they should be brought in up front if it's not in-house. And that service coordinator is so important to not only design and operations, but lease up. And then I would just add that we didn't cover is it's really important that there's predictability and a funding source for the services to be maintained throughout the life cycle and increase with reasonable escalations. We have some developments that their service contracts haven't been increased in decades, and the cost of service providing is more expensive. And then I would also say, future capital expenditures. Part of the challenge that our clients face is that they are doing an excellent job running these specialized real estate, but they need funds to continue to maintain the building because they're 40 years old or 30 years old. So we, do some rehab work. And then in terms of the referral system, I think Laura covered it really well. We just need to make sure we get faster referrals, the appropriately matched referral, and then making sure we have backfill for when they're, our waiting list when there's a vacancy. But I think really smart people are at the table talking about their experience. And I think that everyone should be vested on trying to figure this out, because it's much more effective to have people housed from a cost perspective and an impact than have them on the street. So hopefully we'll find the capital and capacity to address it in the right way and continue to do good work.
Yeah, here. I will definitely second that. Well, as with anything when we're dealing with homelessness and missing middle, we could go on for an hour and a half, but we are at time, unfortunately. So I want to thank the three of you for your insights. They have been fantastic and terrific, and I'm sure this conversation will continue to go forward. I'm going to step to the stage left, and I'm happy to introduce Jeremy Empole, who's Senior Vice President for Public Affairs and Industry Outreach at the Federal Home Loan Bank of San Francisco for our closing. So, Jeremy.
Thank you so much, John. Thank you all for being here, and we're really glad you can make some time for us today to discuss this important topic. As I've been watching and hearing the panelists, I've been also watching the numbers. We had over 300 participants at one time, and most of you are still here, so I hope that means you found this useful. I want to thank the Terner Center and the team there. Really have been great partners to work with on this, and we look forward to the next collaboration where we can be of service to our housing partners. Just a reminder for everyone, this video will be stored on the Terner Center's website for future reference, so you can go back there and check up on some of the questions or thoughts you may have. And with that, thank you very much for the time today. We know it takes a lot out to spend a few hours listening about this, but we're all working tirelessly. And I want to thank our housing champions on this. And thank you all for being here.